I think we're generally constructive on pharma because defensive. FMCG has seen a tremendous run, still trading at multiples that are, quite elevated at a time when their top line is not what it used to be. But, still a consumer story. So if you ask me, should you be sort of putting new cash into FMCG? Probably not yet. There are other sectors to look at. But if you've got a 5, 7, 10-year horizon, the answer is yes, you've got to be there. There will be, despite everything, consumers, the consuming class is growing every year. Now, whether it's 20 million or 30 million, I don't really know. But yeah, it's still a good story. But near term, it would be under some pressure.
But, at a time when markets are no longer chasing safety stocks, growth investing could make a comeback. Fear is no longer occupying center stage. Hopes of global recovery are strong. Does it make sense to still hide into defensives? Typically, defensives do well when there is gloom and doom.
But I don't know where you're seeing this China to me is scary, right? Because
US is the biggest economy.
US is the biggest. China is not far behind, but China is slowing down. If it gets to 6%, that's recession in China, and you've got all sorts of other risks that rear its head. So I don't think we're in this sort of Goldilocks situation where, everything travels well. We're still in an uncertain period globally. And the truth is, I don't think the political class around the world, for that matter, has come to grips with what they can do and cannot do.
Are markets really worried about the 2014 elections?
I'm not sure they're worried. I mean, it's an overhang, and there's a sense, okay, now nothing's really going to happen. As hard as Mr. Chidambaram is trying to do stuff, nothing will actually pass. And even if it passes, to get executed is always an issue. So I don't think they're worried. There's a sense that the same group of guys comes back for the reasons that we all know. So it's an overhang, but they're not necessarily worried. Actually, you've got to get on with stuff, right? So the issue is, will they be able to do stuff that allows people to reinvest in India, get investment in the ground up, infrastructure, all the usual power reforms, all that sort of stuff needs to come through.
What is your take on energy sector? This year we've got two path-breaking reforms. First, diesel prices have been deregulated, and we've got one last week where oil prices, after a gap of 3 years, they've been doubled.
Well, it's nice to see this stuff come through, right? Because this is what we're all clamoring for. The economy, the macro economy can't afford endless subsidies, especially when you're starting a sort of a new food security bill. So anything that takes pressure off the government's finances is a good thing. Gas prices, things need to be market driven, and I think if we're getting to that position on balance, it's a good thing. And you're seeing it translate into NGC and RIL and all that sort of stuff. On balance, a good thing. Maybe becomes a little bit expensive for consumers, but you've learned through what we've seen in the telecom business, actually that's an industry that's been killed because they haven't been able to do sensible market pricing.
So if gas prices are poised to go higher, diesel prices have gone up, inflation is eating into your savings, do you think we could be staring at a massive slowdown in consumer spending?
I would say not massive, but you are seeing a slowdown in consumer spending. You're seeing revenue growth, the revenue line growth decreasing in FMCG companies. So I think you're bound to see that. But on balance, you need to do it. You can't build an economy based on subsidies through the whole period. You have to get to a point where you're creating jobs, you're creating income, that's really what you need to focus on. And I suspect that's really what we need to do, focus on growth. And then it sort of comes to, what about the currency? And I think if you have to let the currency go, you should let it go, but you've got to focus on growth. And that's really what RBI is trying its damnedest, but the guys can't do it alone, right? So that needs to be the focus. You cannot build an economy on endless subsidies.
So if consumer is slowing down, fresh capital formation is yet to pick up, where should one go? Only exporters, I guess.
No, I think there are plenty of names that, as I say, are well-governed names will continue to do well.
Give me some ideas.
I would say, the M&M pack remain a good pack. I guess some of the private sector banks you would sort of play for the long term. Pharma continues to be interesting. Well-governed mid-caps. We talk about Crompton Greaves, something to think about. Bata, something to think about. Cummins, something to think about. If in fact some of this stuff passes and the capex cycle starts again in 6 to 12 months, a lot of these names look very interesting. But as I say, times like this, revert to the well-governed companies, and there are plenty of those.
But do you think the margin of safety rather is in avoiding consumers and revisiting good quality industrials? Because if you like Cummins and if you like Crompton, that means you are betting on the new growth cycle.
Yeah, we are betting on the growth cycle. Now the question is, it start tomorrow or 6 months from now?
That's a question.
Can't predict, but these are well-run companies, and over a period of time will give you the returns. And I think you've seen Cummins actually do really quite well. Bata's really done quite well. Different side of it, obviously. But well-run companies will do well through the cycle.
What is your take on telecom? Consensus view on the street is that the worst of the news flow for the telecom sector is now behind us.
I would say on balance is probably right, and if they have the ability, two things need to happen. They must have the ability to charge the consumer something that allows them to survive. Right now they're all sort of struggling big time. And do we really need 9 providers in one city? And the answer as a consumer is no. So I'm happy to trade slightly higher prices for a sector that will survive, because ultimately telecom is the backbone for a lot of stuff, and right now that backbone is broken. So that needs to happen. Now telecom, generally people are underweight, with the exception of one name, which is Idea, that has done extremely well.
And as a house, I believe you're bullish on that.
Yeah, we remain constructive on that. As a sector, we're cautious on telecom. But for the economy, that's a sector that must do well.
When we started the year as a house, you were also bullish on media as a small sector, as a mid-cap sector. Are you thinking again now?
See, media has had at least in the stuff that we focused on, which is the cable side of it, has had a heck of a run, right? Some of the other ones have sort of plateaued where they were. I think that probably the hype around media is sort of past for now, but the run that we anticipated did actually play out. But from here, sort of neutral.
To your mind, what are the chances that the marginal rate of change going forward, both for macro and for micro, could actually disappoint us? As of now, there is still a bit of an positive economic chatter on the street.
I mean, it's a good question. I have maintained that and I'm going out on a limb here because you always ask me that one sort of the big call. I've said for a while that if you see 1 or 2 quarters of GDP growth sub 4%, it shouldn't surprise anybody. So I think there's a risk on the downside. Clearly there is. And we'll sort of have to deal with it. Maybe the good news in all of that is if you see that the RBI becomes a little bit more aggressive with its rate cuts, because ultimately to jumpstart an economy, whether you like it or not, rate cuts are integral to it. Right now they can't do it because you're still 4.8 or 4.6, whatever the GDP number is. If it goes to sub 4, then at least you have a chance of cutting rates to jumpstart an economy. So yes, there's huge risk on the downside in my view. Consensus is 5.8, 5.6. So if that happens, actually there'll be a rally in the markets because the sense will be rates will be cut.
You've given me a big macro call. Give me a big money-making call now.
Gosh, in this market it's always a hard word. But I would still say pick 10 high-quality names in equities. I think with the sell-off that you've seen in fixed income in the last 3 weeks has to reverse itself. So I think if you look at 10-year govies, 10-year corporate bonds, I think you'll do well because in the 60 or 70 bips that they've sold off, probably reverses itself again. So that's what I would suggest people do.
Is gold looking attractive again?
Gold cannot look attractive. And see what's happened. The timing of gold peaking was US dollar turn started to strengthen. The inflation scare that people had all this time, this gusher of money, there's inflation, it's still 1.2% in the US. The gold, sort of the bloom of the gold rose, I think is...
So the fear trade is over.
Fear trade is over.
This is 2013 or July 2013. Hypothetically, let's say you and me are engaging in a similar conversation on the same forum after 1 year. What kind of market do you think we could be staring at?
Being the eternal optimist, I think a year from now optimism will probably run higher because hopefully elections are behind us. China would have cut rates sufficiently that their economy starts to turn. A year from now Europe looks a little bit better. A year from now the US macro would have stabilized on a maybe 2.5% sustainable growth path. So a year from now I think one can be a lot more optimistic. If in India we can do what everybody is trying to do, a year from now we look a lot better.
What about rupee?
See, I think the bias for rupee will always be to weaken. Okay, so you might have a gusher of cash and it goes back to 56 again, but the bias, you look at the last 4 or 5 years, no matter what, so you've had sort of this, but the trend is to weaken, and there's nothing that's about to turn that.
But can markets go up at a time when rupee is weak? Because whatever argument you are presenting, rupee clearly could tear the fabric of that argument.
It could, but so the point is, so long as it doesn't go from 60 to 70 in 4 days, the bias of a 3 or 4% weakness in rupee is what everybody factors in. Now, from time to time, you'll have a 10%, you'll have a catch-up, but the bias for all emerging market currencies is to weaken, and that's just the nature of an emerging market. They have to do that. So long as it's not highly volatile, as we saw from 54 to 60, I think that was scary for a lot of people. Otherwise, the bias is to weaken.